Good morning, everyone. I hope you're having an amazing Sunday. It is Jobs Week, which you know what that means. We are going to get three different and important jobs report. It typically starts off with the JOLTS report, followed by the ADP or private payroll, and then finished up at the end of the week with the big jobs report. So we will talk about that. We'll also review some Fed comments as they are starting to come in hot and heavy as they are out of their quiet period. But before we do that, we need to congratulate two OG One Rental at a Time fans. I want to congratulate Kenny and Jen. They are the dynamic duo that has always supported one rental at a time. Jen has specifically helped us get some amazing guests on the channel like Ken McElroy, Minority Mindset, and plenty of others. So do me a favor this morning, send some love, send some comments to Kenny and Jen. They closed on two more deals. So I just wanted to congratulate them for that. Their cards will be going out in the mail today. We did finish my 72-hour fast. I see that question here. That first meal was pretty tasty, and I've done a 72-hour fast once before. It was I consider it cheating because I did it on an international trip. So essentially the first 2 days were flying and frankly sleeping, so it wasn't a big deal. This one was a big deal. The family was over, the daughter was home, and I missed 3 or 4 family meals. This one was over. That first meal was great. I lost 6 pounds. I don't know if you guys have ever done a 72-hour fast, but I lost 6 pounds in 3 days. My average steps, just so you know that you care, were over 20,000 because when I got hungry or the family was eating, I went for a walk to get away from the smells. So 72 hours, lost 6 pounds. We'll see how much of that comes back in the next day or so. I expect a pound or two, but no idea. Also, I don't know if you guys saw it, but we had a live broadcast with Dr. Jeff. He's given me and frankly you some more homework if you want to get on a healthy journey. A couple of things that I thought were interesting in that conversation. One was flossing. I don't know if you happen to be a flosser or not. But Dr. Jeff indicated there's some pretty significant research that says if you floss, you live 2 years longer. Guess what? I guess I'm a flosser now. I had never heard that before. And then he had some talk about guys and moisturizer, especially as we get older. Something I had never thought about before. There's a lot more in that video with Dr. Jeff. You can check it out. I think it was on Friday. But let's get into what you came for, the daily financial news. So on Monday, we will get the service PMI. We got the manufacturing PMI on Friday. It was better than expected. Tuesday, we will get that all-knowing JOLTS report. We will also get another ISM services reading, and we will start to get Fed speeches. I will go over some Fed speeches from the weekend in a minute from Daly, Kugler, and Barkin. Lots of stuff to talk about, but get back to the week. Wednesday, we will get the ADP report for private payrolls, and we will also get Fed minutes. Fed minutes, again, come 6 weeks after their meeting. It'll be interesting to see how much discussion there was about not cutting. Again, when we had Powell in front of the microphone, he said basically it was a closer call than expected to give us that 25-point cut. We will also get mortgage demand. Again, mortgage demand was down big time last week. We will see if that continues. Thursday, we will get our weekly unemployment claims, but also remember we have to watch continuing claims. Continuing claims did peak out at 1.91, thankfully fell back last week to 1.85. Weekly claims, I think, came in at like 210 or 212, so nothing to look at there. And then on Friday, we will get consumer sentiment and the big jobs number. Unemployment is expected to stay at 4.2. Last month, we created 227,000 jobs. Forecast is to come in at 155. Remember, last month was a noisy number as we had the Boeing strike kind of reversal, right? We took it away the month before, we gave it back. So we'll see what comes in the jobs number this week. Folks, do me a favor. If you are planning to come out to our in-person live event in Vegas, February 15th and 16th, please go buy your tickets today. We are now under 90 tickets available. We will sell out. We lowered it to 300 capacity from 4, less than 90 tickets. We're selling about 10 tickets a day. So we could be sold out by the end of the week. I don't want you to miss it out. So go get the tickets on Eventbrite. Just look up One Rental at a Time. It should be easy to see. So let's talk about Daly, Fed President Daly. I think she's of San Francisco, Mary Daly. She had a couple of things that I thought were interesting, and we're gonna have to start putting our Fed presidents in hawkish and dovish camps. Anytime we are close to a pivot, things get interesting. For the last year or so, the Fed's been basically in sync, right? Inflation's a problem, raise rates. We're too tight or restrictive, lower rates. Now it's getting interesting. So what is Daly having to say? 1, inflation is uncomfortably above 2%. I want you to remember that because a different Fed president said something basically completely different. In addition, Daly says there's an increased trade-off between inflation and the job market. All right, so they're seeing a little push-pull on jobs and rates. And then finally, policy rules serve as a beginning point for setting tones of the discussion. She's basically addressing the point that the Fed gets this report or set up before the meeting, and it's a guideline that they all start from. All right, let's go further. Let's talk about what Fed President, I'm going to call him Kugler, had to say. I'm not sure if I'm saying that right. I haven't heard it pronounced, so forgive me if that's wrong. Labor market is in a good place. We are heading to 2% inflation. Again, inflation is approaching 2%. These are his words. We are moderatively restrictive today. We want to maintain the current unemployment rate. Again, remember, we had this inflation and job market job market that we were watching. He believes that recent inflation data was a bump and wants to prevent a surge in joblessness. So if I were to characterize Daly, which we went through first, I would put her in the slightly hawkish camp. Kugler is clearly in the dovish camp. Recent inflation was, I already said that. There is a view that the Fed can take the time on future rate cuts. All right, let's talk about Fed President Barkin, our third and final Fed president that was speaking over the weekend. There is too much uncertainty to factor in the policies in the outlook. Now, what he's talking about there are the Trump policies. Obviously, Trump will be inaugurated on the 20th, and we can expect plenty of executive orders and other things. And what Barkin is basically saying is there's too many variables, too much uncertainty, and we will just wait and see. Next, we must see inflation at 2% or weakening in demand to cut rates. Again, I would call this slightly hawkish. The consumers are becoming more price sensitive, meaning that companies will have to eat margin and lower prices. Here's the one. This is one that you and I have been talking about, and Dan Bird as well has been talking about for 2 or 3 months. We've been telling you this is coming. It was just funny for me to read this from Fed President Barkin. The base effect should bring inflation down in the next couple of months. Remember, we have been pointing to the February, March, April, and May reports. Given the base effect, just given math, it should make it look like inflation might actually dip below 2%. So again, it's fun to hear Fed President Barkin say it out loud, right? The quiet part out loud. This is Barkin again, wants to stay restrictive longer given upside to inflation. Again, we are seeing doves and hawks. Housing demand, this is funny, housing demand is still very healthy compared to supply. I'm not sure what he's looking at. Transactions are at or near record lows. Supply is building. And it'll be just very interesting to see where we go from here. Again, we've seen pretty clear evidence that rates above 7, buyers revolt. Rates close to 6, buyers swarm in. So again, it will be interesting to see where we go from here. I do want to talk about our amazing school community. For the first time in a long time, we actually went 48 hours with no one signing up. Yes, no one signed up for the amazing school community, one rental at a time. Again, we now have 6 masterminds. Out-of-state investing just kicked off last Friday. We've got agent brokers. We've got ladies of ORAT. We've got 3 basic accountability groups. You need to be there. We've got a lot of free education in the group. We got stuff from myself, Ty, Jason Pritchard, and others, and plenty of playbacks. In addition to 357, I think, 357 folks that are all going the same direction. This is a key thing for a lot of people. You got to get around people doing the work. Some people that have 0, some people that have a couple, and just get in the mix, ask questions, build friendships, be held accountable each and every week for the actions, looking at your buy box, writing disrespectful offers. It is all there for you for a measly 67 cents a day. Yeah, 67 cents a day. So at the end of the day, folks, it is jobs week. It is time to listen to the Fed to see where they are at. Please go buy your tickets to the Vegas event. I want to see you there. Bring your books. I will autograph them. Sign up for school. It is the spot to be. And I will see you tomorrow live, 7:30 a.m. Take care of yourself. Have fun. And if you are on a health journey, enjoy the process. It takes work. It takes execution. So make Michael healthy again. That's what my ad says. If you can't read it, I think you can read it. You can read that, right? Yeah, you can read that. All right, folks. Take care. Later.